To build anything that truly lasts, it takes time.
Management is addressing, so let's go over.
So it's not actually TCS management, Tech Mahindra management is indeed live. Yeah, so let's go across. So because the numbers are out, let's listen what management commentary is.
The year-on-year headwinds were primarily due to our field services business, which we are right-sizing as previously shared. We also saw spend reduction in the automotive sector, which impacted year-on-year revenue performance. Importantly, this marks our 7th consecutive quarter of margin expansion, which is a significant milestone and speaks to the rigor of our operating model and our continued focus on cost efficiency and the quality of our revenue mix. Let me now delve a little deeper into our performance. Our communications vertical posted a year-on-year growth of 2.5% on a reported basis, supported by stabilization in spending in our top client. Looking ahead, our strategy is to leverage the strength of our long-standing relationship with global communication services providers and leverage our unique capabilities in IT, networks, and the Comviva software suite. We have a unique right to win in this vertical, and we are actively investing to scale our capabilities in digital platforms, API monetization, and vertical-specific services to create adjacent revenue opportunities. The manufacturing vertical declined by 4%, impacted by softness in discretionary spend within the automotive segment. To elevate our growth potential in this vertical, we continue to engage closely with key manufacturing clients, and our Manufacturing Experience Center, which was inaugurated in January this year in Chennai, has already hosted over 60 client visits. It is becoming a true showcase of our manufacturing capability, innovative mindset, and our distinctively experienced staff. Our BFSI vertical reported a year-on-year growth of 4.7% and continues to be one of our fastest growing verticals. The marquee Fortune 500 and Global 2000 customers in financial services and insurance have engaged with us, enabled by a key differentiation, asset and wealth management, payment, and core capabilities in platforms like Guidewire and Temenos. We remain confident about our long-term potential in this vertical across all of our geographies. Our high-tech vertical declined by 3.3% year-on-year on a reported basis. This decline was driven by an ongoing restructuring in the semiconductor industry, including steep budget cuts and workforce rationalization at a key client. While these headwinds are playing out, we are strengthening our capabilities in silicon design, embedded systems, and digital product engineering. Our client engagement remains strong and anticipates a gradual recovery in the second half of this year. On a year-on-year basis, Americas declined by 5.9%, Europe grew by 11.7%, and the rest of the world increased by 2.9%, with both regions aided by a favorable currency tailwind. In our client metric, I'm happy to report that we have added 2 clients in the $50 million plus bucket over the last year. This clearly demonstrates our ability to scale engagement and deepen relationships within key accounts. On large deals, the TCV for the quarter stood at $809 million, representing a 44% increase year-on-year on an LTM basis. Our centralized solutions team and our contract management group have yielded positive results, particularly in securing multi-tower high-value deals. Additionally, large deals over $25 million now make up a significantly higher proportion of the total large deal TCV. The deals are broad-based across comms, high-tech, BFSI, and other verticals. A few of our key wins include, firstly, selected as a growth partner by one of the USA's leading consumer wireless operators for its customer operations transformation. The designation as a growth partner unlocks the door to all future opportunities as per the client's new sourcing strategy. We've been engaged by a leading global high-tech company to help them deliver truly immersive user experience powered by their LLM platform. TechM will ensure an enriched experience for more than 2 billion users while ensuring the platform remains safe and secure. We've been chosen as a primary partner for a leading UK-based telco for a multi-service line deal to deliver and manage applications across their fixed and mobile networks. The scope includes delivering services across application services, network services, next-gen services, engineering, and digital enterprise applications. We've been engaged by a railroad customer in the US for the development and support of our portfolio of applications across multiple corporate functions of the company and across multiple technologies, including SAP, Salesforce, and data and analytics. TechM has been selected by a leading global fashion apparel brand for a multi-year strategic engagement to provide digital and data transformation and support services. The scope includes SAP Fashion, Cloud, Data and AI, and digital commerce capabilities with a dedicated Global Capability Center or GCC, drive innovation, cost efficiency, and business agility. Overall, for our financial progress, we are beginning to see early results of the structural changes and strategic choices we have made. Our deals win momentum remains strong, and we expect this to start reflecting in our growth in the next quarter. In sum, our margin trajectory is steadily strengthening, and we are confident in our ability to build revenue momentum. Now I'll talk a little bit about talent and leadership. And this has been one of our key differentiators of our transformation journey is the formidable team that we have built up. Let me highlight some important developments on the talent front. Amol Phadke has joined us as Chief Transformation Officer and will be helping us on our progress with our go-to-market initiative. He brings over 25 years of experience in technology and business leadership in areas like AI, cloud software, networks, and IT, in firms like Google, Telenor, and BT. He will be especially useful given his deep expertise in comms. Additionally, we have seen the internal elevation of leaders into key roles, including the head of communications portfolio, head of our telecom portfolio for the Americas, and the head of our India, Middle East, and Africa business. These appointments underscore our strong internal talent bench, and they reflect our ongoing commitment to building a high-performance organization. We continue to focus on leadership development, succession planning, and creating a culture of accountability. Our people remain at the heart of our transformation story. During the quarter, we launched Tech Zenith, our flagship leadership development program in partnership with the reputed business school in INSEAD. Our AI-delivered right strategy, which we unveiled last quarter, has been resonating really well with our clients. Our value lies in helping clients transition from proof of concept to production, from the sandbox to production system. This strategy is being executed on 4 foundational pillars: transformation delivered, productivity delivered, innovation delivered, and assurance delivered. These pillars are also contributing meaningfully to our AI deal win. We now have a portfolio of 200 plus enterprise-grade AI agents across industry segments, several of them already in use at scale with our clients. Our agentic AI offerings also include a hybrid human and agent workforce. TechM AI consulting practice enables clients to validate ROI and to prioritize AI use cases in a systematic and efficient manner as they evaluate their AI roadmap. Tech Mahindra is well positioned to support clients effectively.
All right, that was the management of Tech Mahindra detailing the quarter gone by, but the company has posted a bottom line of 1,141 crore, and that seems a miss as far as street estimates are concerned. But apart from that, the highlighting part was $809 million deal wins, and the management specified 2 of the deal wins happened in the quarter. Also, the growth in BFSI was something which company is proud of and looking forward for that. To dissect the numbers, I have with me Aditya Shah. Aditya, hi, good evening. Have you seen the numbers? What is your take on bottom line? Is it lesser than what street was penciling in?
Yes, numbers are a tad bit softer with respect to the constant currency growth as well as the profitability numbers, but that was supposed to be expected. all the top IT companies, TCS, for that matter, all other companies have reported weak set of numbers. So I'm not surprised by the weak set of numbers. Guidance of the management over the for the future would be really very important, and I expect a recovery, decent type of recovery, only towards the second half of this year.
Margins is something which company has posted at 11.1%. Do you think that is better than what was street penciling in? And also the commentary seems slightly better than what earnings are there this quarter.
Yes. So as I said, the commentary does point towards a recovery, but only in the second half of this year, later half of this year. So from my perspective, the margins are okay, not a problem, very sustainable, but the recovery will only happen over the second half of this year or early next fiscal, that is from March onwards. So nothing to be surprised about. Results are weak, but that was expected. When we saw all other companies also report a weak set of numbers.
Aditya, we have seen now 3 results. All of them have posted weaker than anticipated numbers, talking about TCS, HCL Tech, and now Tech Mahindra. Still, we have seen that IT pack has performed slightly well. If you talk about yesterday, today, do you think what will be the impact on stock specific, particularly if I talk about Tech Mahindra, and more so on the IT names, which will be your pick?
I don't think there will be any impact on the stocks. The stocks were already prepared for such weak set of numbers. I feel that the bottom for the IT sector has already been made. Slowly and steadily, the business performance of these companies will start to improve, and the stock prices will then behave accordingly. So, from my perspective, if somebody has a time horizon of 12 to 24 months, they can start to invest in the IT stocks with an investment horizon of at least 3 to 5 years.
Concerns which remains for IT companies, and it is repeated in the results of Tech Mahindra as well. They have mentioned manufacturing vertical has declined due to softness in discretionary spending with auto. Now, this is something which is a concern for the whole of IT companies till the time clarity is there. Aditya, how much of the beating do you think IT companies will take due to it?
See, all IT companies are reporting weakness in the auto sector. The ER&D companies like Tata Tech, also L&T Technology and Tata Elxsi have reported the auto sector not performing well within Europe and within the United States as well. So I don't think this again is a surprise. This is just another IT company which tells us that the European and the US auto market is still very weak. So from my perspective, I am very happy. It is very decent, and I know, and the market already knows it. So there's no worry about it, and I don't think that the market will behave negatively to this.
Aditya, thank you so much for joining at this hour and detailing your take on Tech Mahindra. With this, it's time for a wrap in this edition of News Now. Thanks for watching.